Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody. Hope you're doing amazing. Welcome to our Monday morning edition of the Daily Market Commentary. It's our expanded edition today because we didn't have our live trade room last night. I was running a little bit behind as we finished the BP MS 150. We raised, as a group, the group that I was with, we raised a little over $4 million for the fight against MS. So thank you guys so much for your support and the help. And I'm sorry that I ran a little bit late last night. So we're going to do an expanded video today where we'll take a look not only at our 12 futures markets, but also a couple of different options positions as well. We will follow this video with a little bit of a document on some of the trades to look at and some of the trade feeds, and then also keep an eye on the trade feed worksheet as new things are going to get added. So let's go ahead and dive right in. So starting with the S&P this morning, we are down about 0.75 of a point. Now, we're just below the all-time highs. It's funny, we came so close to it basically and bounced off of it in the overnight hours. Gotten a little bit of a pullback. And I think that on an hourly chart, you have a little wick over wick level here that could give you another opportunity for entry is somewhere in this 29.29 by 29.25 area. Now, there's room to make money on the way down. If you are so inclined, I think there's an opportunity to short it on the way down. I am not a huge fan of shorting in a market like this, but if we break below this area here, hopefully I'll get the video out soon enough to get it there, but breaking below 29.38, if we get some basing in front of here, could give you an opportunity to short it on the way down if you really want to. I'm not a huge fan of that for the reason that we're in a bigger picture upward trend and trading to the downside becomes a little bit more risky. But the only reason that I might be okay with it is looking at the NASDAQ. Now, the NASDAQ, we're actually down off of our all-time high, and it's showing some relative weakness. So you actually might have a better short opportunity in the NASDAQ, and then that same area would be down here. It's not as clean in the NASDAQ as it is in the S&P. The S&P level is much cleaner. Want to point this out, though. On the 4-hour chart, no question, we are just about back to our all-time high at 29.47. We're continuing that steady rise higher. But the thing to remember is that after just about every all-time high, you do see a bit of a pullback on a daily chart for a number of days, right? Like even when we go back to when this all-time high here was eclipsed. Let's just draw a line across. So this all-time high gets eclipsed. It goes up for a few days, and then you see a bit of a pullback taking us back to just below the all-time high, and then it rallies up again higher. I wouldn't be surprised to see that. So I would not be surprised to see price continue to rally up beyond our all-time high, and then these levels down here become very, very valuable for long opportunities, not just for the S&P, but also for strong stocks. Now, the thing to consider in here is that our 4-hour chart, let's put in the daily. On the daily, it's clear to see, and I make it even on the daily so that you can see it, that our momentum is getting weaker, right? As our prices are continuing to rise, our momentum is getting a bit weaker. Now, you would expect our momentum to get a bit weaker, frankly, because we had such a V bottom that it eventually has to weaken up a little bit, okay? Now, it doesn't mean that we're going to get a big pullback, but we may get a pullback for a couple of days that allows us to get stronger entry. It doesn't change my overall big picture bias, and I'm not willing to go short until I'm proven that it's doing that. Pretty much when I look at this on the 4-hour time period, the 4-hour time period is telling me that we're going to continue to go higher. We've not really put in, we put in this one little area here with lower swing low, lower swing high, and then I immediately got a higher swing low, right? And then we took the breakout trade above here. So we haven't taken a short in weeks on the S&P on this hourly chart, and there's a reason we haven't. It hasn't made any sense. And that's worked out pretty well for us. So for those of you that are trying to continue to short this market, please stop. I don't want to see anybody get crushed, and that's a way to get crushed. Now, when it does start to reverse and head down for a couple of days on the hourly chart, we'll take some losses. And a lot of people don't like to hear that. But the truth of the matter is, when you are trading in a trend direction, when the trend changes, you're going to take a couple of hits, and I'm totally okay with that, because that just gives me opportunity to get in on other directions and other trades. Okay, so that's the S&P. Nothing really to add on the NASDAQ. The NASDAQ level, when I look at the 15-minute chart that we identified, this reversal trade, unfortunately, didn't quite get hit, but it is still pretty valid. The NASDAQ also giving me very much the same setup. If you wanted to take the short on the NASDAQ, it could be below that area as well. Looking at crude oil, so in crude, we had our Friday level where price came down into our level, and then we got a whole lot of nothing, right? Remember our 6 candle rule, 1, 2, 3, 4, 5, 6. So at the worst on Friday, you should have been stopped out at break even. Possibly could have held it over the weekend if you really are so inclined, but I don't think that makes sense. If you follow the 6 candle rule, at the worst, you should have been out of this one at break even. So now I'm going to remove this level as it's no longer going to be valid in what it is that we're looking at going forward. And we are definitely putting in some weakness. So look at this on the 4-hour chart. We've put in that lower swing low, lower swing high. So now I've got the approval to short. I now have the approval to short, and we got this level way up here as a potential. I've got a couple of areas down, in here that might make sense, but the way that we're basing in here, the bottom of the level that we just hit could act as a breakdown point, specifically if we get some basing in front of that area. So keep that area in mind for a potential basing breakdown. All right, so let's go to gold. So in gold, this is why we do confirmation entries. We got one hit on it, and then price moved away. We got a second hit on it, and a very strong move away that only lasted a few minutes. And then price rallied right up through the area and now has begun to come down. So in reality, this one did not trigger for me because my entry here is about 126.5, and we didn't quite get high enough to get there. So even though the level itself worked with this long wick for a day trade, some of you may have taken the day trade. For me, it didn't follow the rules. So now I'm looking for what's the next opportunity. The next opportunity, I think, is this shorting area somewhere up in here. 1286.90, 1288.70. Although I think we could break down from the level we're in right now. I think that we are actually well positioned for a breakdown below this 1282.60. So I'm okay with either one of those trades. When I look at the 4-hour, we had a higher swing high, but I didn't have a higher swing low yet in reality. And I think this could be a good chance to take that next leg down. All right, bonds and currency markets. Now remember, we didn't have a whole lot happening in these markets, but we did have this bond area trigger as we got a touch and a little bit of a move away. If you didn't hold that one over the weekend, no big deal. You should have been closed out for a little profit. I'm going to leave the area intact, although I don't like the move away, but I'm going to switch it to a confirmation style entry. So hopefully that ZN position worked out well for you. You got a little bit of a run out of that trade. If you caught that one, a little bit of a run, not a lot, but it's take the little profits when you can get them. In the Aussie, we're continuing to march a bit higher, almost to our reversal area in here. I think that the Aussie could stand for a breakout above this line here. Keep an eye above this area here for an Aussie breakout to the upside. Stop would have to go below this line right there because this would be our last pivot. Now, I still want to see a little bit of basing before this breakout. So, going straight through it might not be the right fit, but if we base in front of it, that would be the right fit for a trade up into this region. In the euro, we're getting a very similar price pattern and price shape. although not quite as clean. I don't love all the selling pressure that we're getting in through here in the euro. But this same supply level does indeed exist here in the euro. And then also in the Canadian, similar price shape, similar price actions, although a slightly deeper pullback in the Canadian dollar. When I look at the Canadian, I'm going to add this level up here, which is fairly far away, but still could certainly get hit this week. On the hourly time period. I like this level because this was really the origin of the breakout below this line, right? We had a breakout below this line. Well, this was the origin of that breakout. And that's what I like about that level. It's the origin of a breakout. Isn't it like the enemy of my, the enemy of my enemy is my friend? The origin of my breakout is a reversal. I don't know. I just made that up. All right. So, there's a chance for a long on this one as well, above this region. If we base in front of it, we got a base in front of the level, and then you got a chance for a long above that area there. Let's see. Let's go into copper, nat gas. Remember, I made the comment that nat gas is essentially becoming nearly untradeable for me, and nat gas we did gap up. We did gap up on the contract rollover. Price rallied up into this little area here where I anticipated a reversal, and then it just blew right through it. So sometimes that's going to happen, unfortunately. We blew through that particular level. Now the next best level for me is that little wick over wick area right here. Tiny little zone. Very minimal risk. Or you can take the gap rollover. Actually, you know what? I'm going to take this one off. I'm going to be a little bit more safe and take just the gap area here. I know it's a rollover gap, but rollover gaps do still oftentimes function as gaps in some of these commodity markets. The British pound, I had a breakout long above here on the British pound. We got a little run into it. Price pulled back, and now we're continuing to move higher. If you did get into this one, move your stop to break even. If you didn't get into it, I wouldn't get into it right now. I think that we may come back down into this region. I think there's a chance for another run higher, but I would move your stop to break even if you got in. And if you didn't get in, I wouldn't jump in at the moment. You could go candle to candle style on this if you so chose. I think there's opportunity to do that. Japanese yen. Japanese yen, we are still in our sideways chop. Not a whole lot to add in that one. Not a whole lot to put into play here. We're still, we've widened out our zones a bit. But the Japanese yen continues its sideways price action. And then copper, for those of you out there that trade copper, a really nice reversal on copper off of this level right here, which is a pretty clean supply. So we got a really nice reversal off of this base drop below a pivot high, pretty clean supply, nice little move away from there in the overnight hours. Now, if you didn't catch it, I see that we've got two little wicks here. And we're getting a little bit of a move higher. This is a speed candle, and speed candles tend to get retraced. So if I go look at that on a 15-minute chart, what that shows me is there's a chance of this speed candle getting retraced and this becoming a valid reversal point going forward. So that's one to look at going forward for the rest of the day. Okay. So when it comes to futures markets, those are the futures markets. Oh, I want to check is the rut. I usually check the Russell in the live trade room, so I want to dive into the rut. Now, the rut, looking at that one, we had on Thursday, we had talked about, if you wanted to take a short, this one would be your market to short. And I'm not sure how many of you took that one. We did get a nice breakdown on that, and it came to our target area, which is our opposing fair price value, and then got some power and rallied back up. So hopefully you caught that that if you're going to take the short, the rut was the one to do it in. We are fairly strong in the rut at the moment. When I go to the daily chart, though, obviously still way below the all-time highs. We had the BFF trade that a couple of you guys are still in on the IWM. And that IWM position is continuing to kind of work out, but it's not really given us the breakout that we were anticipating above kind of this region here where my cursor is. Not a whole lot of movement in there. So I think you still have plenty of time to play for it. I don't think it's, you're hurting yourself any by waiting on it. And this is a pretty strong base that overall this market's forming. But over the last few months, it's still overall weaker because it's not back to its all-time high. Whereas the Nasdaq's put in a new all-time high, the S&P's sitting right there, right below it, and the Dow Jones is also just below it, right? So you're just below the all-time high in a couple of these markets, and being just below that all-time high in those, but not in the Russell, does give you a little bit of pause for concern. But overall, still moving pretty well. Now the Dow has been a little bit weaker than the other markets. Not overly surprising. Typically in a bull market that the Dow would underperform. But if I want to look at the Dow for today, for a reversal opportunity, I don't really have as clean a one. The Dow is actually underneath the rest of the markets, being hit pretty hard by some earnings issues. Nice reversal off of this little pivot area here, where I think we could see price kind of continue to come down a little bit during today. All right, so those are all of our futures markets for today that I wanted to make sure that I touched on and covered. If you've got any questions, send me an email. Now I want to dive into a couple of options plays and options positions. So let's talk a little bit about those. So a couple of them to review. So we've got a couple of trades to review from the live from the trade picks worksheet and things that we've looked at in the live trade rooms. So a couple of them to review. One is Autodesk. So in Autodesk, we have a breakout to the upside. Price has moved nicely in our direction. I think now it's time to take your stop and move it up. So take your stop and move it up to just basically move it to break even. Take your stop and move it to break even. We've gotten not a whole lot of great movement on the hourly chart. We've put in a couple of new bases, but take your stop and move it to break even on the Autodesk position if you got that one. So that one's running along very nicely. Looking at Costco. So in our Costco trade, we entered the trade on this little bitty breakout here. And then the very next day we gapped down and really haven't done a whole lot since. So Costco, you're not out of the trade yet. We entered on a daily chart, so we're 2 candles into it since our entry. So still trade isn't over. Still plenty of room for price to move. No real change to be made in Costco. In Lululemon, Lululemon was one we looked at. We had talked about that price. That one has moved up pretty nicely. In that one also, take your stop and move it up to the break-even point. Although I think that you've got another opportunity for an entry on this one. If you wanted to take another entry on Lululemon, I think you've got another opportunity for an entry at a candle-to-candle style with this little hammer that we put in. I love those candlestick patterns. Those are really nice patterns. If we gap up this morning or if we trade higher than yesterday's high, I think you got another shot to enter into this thing. And by the way, if you do enter into it, your volatility is low enough that I think it's okay to just hop in on a call. You're really close, right? Well, let's pull the full. You're fairly close to that lowest volatility point, and you're coming up on earnings. So I think the volatility will continue to rise as we head into the earnings season. Okay, so Lululemon working out pretty well. AIG. AIG is sitting just, we got our entry above the breakout, and then we got a bunch of candlesticks and haven't done a whole lot. AIG, it's time to close this thing out here soon for a small profit. If you're still in it, move your stop to break even. You can close it out for a small profit. From our time of entry, we've seen volatility rise. So you should be able to profit a little bit from the rise in volatility and from the and as well as from the from the price movement. We've had a little bit of price movement to the upside. Next, Celgene. So Celgene still hasn't met entry. It's on the Trade Picks worksheet. Still hasn't met entries. We're waiting for the breakout above 95.35 with his target up here at 103.57. stop would be below here, but we've not quite gotten above that level yet. We came super close in here, but the high on that day was 95.20. And so we're getting super close, not quite there as of yet. And then KBH, we broke out, and then we came really close to getting stopped out. Haven't quite gotten stopped out yet. I'm not feeling overly confident about KBH, but we'll see what happens. That one could wind up being a small stop. And then last is ADP. So ADP, we had the breakout above 156. And we've moved up now to 165.50. If you got into that one, take your stop and move it up to below 160.93. So if you got into that one, take your stop and move it to below 160.93. So those are the existing trades. Let's go look at 4 potentials. So the first one is BlackRock. So in BlackRock, BlackRock is BlackRock's a $600 stock. Easily could get back up to 600. I think this could be a longer term play, especially if we get a little bit of a pullback into this region. Now, we may not get a pullback into that region. You might actually want to trade the breakout above this area. And I'm okay if you do either one. Either one, to me, works for pretty good trades. But what I like is how low our volatility is. Our volatility is really in the low spot. So a couple of ways you can play this when I look at BlackRock. And so when I dive in here a bit deeper into BlackRock, you can go all the way out to the Julys. And when you go all the way out into the Julys, your spread isn't all that wide. You're looking at about $22 a share to just buy the call. I'm okay going out and doing the 470 call on the Julys. Okay, so if you just buy that 470 call on the Julys, it's going to cost you $22. Well, how can I finance that? Well, what if you go out and sell the May 490s against it, right? So if you buy the 470s and sell the 490s, now that it drops your cost basis down by about 25%. It caps you at this little range here, and now your risk graph looks a bit like this. But now 490 is your number, and when I look at 490, that keeps me, right about here. That keeps me a little bit below, just in case you hit this area here and it acts as supply. Okay, so that is one way to trade it, the 470s, and then sell those shorter term 490s. If you don't want to sell the 490s, you want to give it a little bit more room, do something a bit higher like the 505s, but now you're only getting $1.25 credit, right? It may not be worth it at that point. So I'm okay just buying the 470s. 470s are not overly expensive. For a $500 stock, you're getting in for $22 a share. That's a really, really good price overall because our volatility is so low. You're not even paying 10% of the stock price at that point. So I think that one works out really, really well for a strong potential, and I think this could be a really long running position. Okay, all right. Next would be BPOP, Popular Inc. So Popular Inc. I think could be a breakout to the upside, right? Above this area here. You might not have to go above the actual all-time high, but I like the fact that we are hitting up against this high with some higher lows kind of also coming into play. So those higher lows coming into play, popping up against that all-time high, I think makes this one a potential going forward. Volatility is fairly low. We've just come off of earnings. Although volatility at one point was so high, I think that could be skewing this a little bit. So I actually think this number is lower than average, and it was this really big spike that skewed the whole yearly realm. And so I think that one could set up for a trade either way. You can do the long or you can do the bull call spread. Either one I think will be okay on this one. So if you do the bull call spread, I'm okay, but I am actually just okay with the long call on here. You do the June call on this one, and it's trading at $3.45. If you wanted to do the bull call spread, still looking at the Junes, you've got to do the 55 by 60s. So the 55 by 60, it's a little bit more costly than what I would like to be, right? We want to be less than a 50% on there. We're getting a delta of 38. So the higher than necessary delta combined with a 4 cents over on the spread still might make this one okay. We can probably still use it. Two more to look at. The first being Facebook. Now, Facebook, we had the huge gap up. We're getting a little bit of a pullback. When I look at Facebook after that gap up, that gap was on earnings. However, the origin of the move was this down here. And I think that if you just play the gap, there's a chance that people who just trade the gap could get stopped out if it comes down into here and we can see a reversal. It might also go candle to candle from today's low, from yesterday's high. You could probably even go candle to candle on this at this point if you really want to get long. But I think being patient and waiting for this area here could be the way to go. And I think that just the long call is the opportunity. Another one that is overextended is Disney. I get Disney gapped way up. Gapped way up earlier this month. I want to say that was on the announcement of their streaming service. And then we've got earnings coming up on May 8th. I think that we've rallied way up. A bit of a pullback into here could give you an opportunity to trade it. Be aware that earnings are super close. But, this is the end game push over the last few days. Endgame, I think Avengers Endgame is shattering box office records, which is not overly surprising. And I think the fact that it's not overly surprising is actually going to cause price to come back down to earth a little bit. I wouldn't be surprised to see price fill this gap either. So, if I don't catch this trade because it hits here before earnings, I'm not going to take it if it hits there before earnings because my volatility is too high. But on earnings, this becomes a good spot. So too does the gap fill area. So both of those become good plays on some sort of an earnings announcement and some sort of an earnings play. So those are the four that I was looking at for today. Now, I don't have really any bearish positions to speak of because there's no reason to look for bearish positions when the market's going straight up. Are there bearish opportunities out there? Absolutely there are. I just haven't added any at this point. So we will take a look and see if anything does indeed come out. So that's all I have for today. I hope you guys have an amazing day. And to remember that Tuesday evening is our live Q&A session. So make sure that you bring your questions, have your mics ready to go, even your cameras if you want to, so I can kind of see who's talking to me. And then I will see you on our live Q&A session and in tomorrow's daily market commentary. Have a great day, everybody. See you.